Deep dive. Today, we're taking a closer look at insurance companies, specifically how they figure out risk when you apply for things like life insurance, health plans, or, Medicare supplements.
Right. And a key part of that is underwriting and, well, these things called knockout questions.
Knockout questions. Okay, so these are designed to sort of quickly weed out applicants.
Exactly. They're like the first hurdle.
Yeah.
The insurer uses them to spot individuals who might represent a higher financial risk pretty fast.
And if you answer yes to certain ones.
Yeah, a yes can unfortunately mean an immediate applicant DNQ does not qualify.
Right.
Stops the application right there.
So think of it like a filter then.
A pretty strict filter. Yeah.
And our mission today, our deep dive,
Yeah.
is to really dig into three main types of these questions.
Right. We're looking at the ones about chronic illness and dependency,
Right.
then severe medical conditions, and finally, immune deficiency disorders like HIV.
And we want to understand why that yes is often an automatic no from the insurer and, well, what that means for people trying to get coverage.
It's definitely where finance meets very personal health stuff, and it raises some big questions, about fairness and access.
Absolutely. And it affects a lot of people. I saw the 2024 report, Kaiser Family Foundation, I think,
KFF.
said 15% of Americans get denied life insurance because of health issues. That's significant.
It really is. A lot of people potentially left without that safety net.
So let's jump in. That first knockout question category, chronic illness, dependency, cancer. It's a big one, right?
Oh, it's very comprehensive. Let me read it out. It's quite specific.
Yeah.
Are you currently hospitalized, confined to a nursing facility, a bed, or a wheelchair due to chronic illness or disease, currently using oxygen equipment to assist in breathing, receiving hospice care or home health care, or had an amputation caused by disease, or do you currently have any form of cancer, excluding basal cell skin cancer, diagnosed or treated by a medical professional, or do you require assistance from anyone with activities of daily living, such as bathing, dressing, eating, or toiling?
Whew. Okay, that is a lot packed in there. You can sort of see how each piece is a potential red flag for risk, though.
Definitely. Let's break down.
So hospitalization or being in a nursing facility, what's the core issue there for an insurer?
Well, it points to serious ongoing conditions, right? Maybe advanced diabetes, severe COPD, things like that.
And the cost.
Exactly. The cost is huge. CMS data for 2024 put average nursing home care around $100,000 a year per person.
Wow. Okay. So a yes there signals massive potential payout.
A very high, potentially immediate financial outlay. Yeah.
Got it. And then using oxygen equipment.
That points squarely at respiratory problems. COPD again, maybe pulmonary fibrosis.
Which impacts lifespan, presumably.
Significantly. The American Lung Association figures suggest about a 50% 5-year survival rate for COPD. So, higher mortality risk.
Okay. And hospice or home health care? That seems pretty clear-cut.
It usually is, yeah. It often means end-of-life care or a very severe disability needing a lot of support.
Prognosis is usually short for hospice.
Typically 6 months or less, according to the National Hospice and Palliative Care Organization. So again, very high, very immediate risk from the insurer's view.
And amputation due to disease, like diabetes.
Right. That tells them there's a serious underlying chronic condition, and it's already led to major complications. Diabetes-related amputations were actually up 7% in 2024. Shows it's a marker of severe, poorly controlled disease.
Makes sense. Okay, now cancer. Any form of cancer, it says. But it excludes basal cell skin cancer. Why that specific setup?
Well, cancer treatment is generally very expensive. The National Cancer Institute put the average cost around $150,000 per patient in 2024. And survival rates obviously vary a lot. Lung cancer, 5-year survival is, 22%? Breast cancer, much higher, 90%. But the cost is usually high regardless.
But basal cell skin cancer is different.
Yeah, it's usually not life-threatening, easily treated, doesn't pose the same kind of financial or mortality risk, so they carved that one out.
Okay, that distinction makes sense. And the last part, needing help with ADLs,
Okay.
activities of daily living.
Like bathing, dressing, eating.
Yeah.
That indicates a loss of independence, often due to stroke, severe arthritis, dementia later on.
And that implies long-term care needs.
Very likely. An HHS study found most needing this help are over 65, and care costs can hit $50,000 a year, sometimes more. So it signals ongoing, potentially rising costs.
So across that whole question, the common thread is significant ongoing health issues and high potential costs.
Pretty much. Hospitalization, oxygen, hospice, amputation, active cancer, needing daily help. They all point to major health challenges and likely immediate substantial medical needs.
Which leads straight to that does not qualify.
Yeah.
Okay, let's move to the second key question. This one seems focused on really severe conditions and terminal illness.
Yeah, this one's also pretty direct. It asks, have you had or been medically advised to have an organ transplant or kidney dialysis? Or have you been medically diagnosed as having congestive heart failure, CHF, Alzheimer's, dementia, mental incapacity, Lou Gehrig's disease, ALS, liver failure, respiratory failure, or been diagnosed by a medical professional as having a terminal medical condition or end-stage disease that is expected to result in death in the next 12 months?
Right. And again, a yes here is typically an immediate DNQ.
Typically, yes.
This list feels even more serious, maybe. Life-limiting.
Many of them are, yes. Let's look at why.
Organ transplant or kidney dialysis. Those are huge medical interventions.
Huge and incredibly costly. A heart transplant averages over $1 million. Plus, there's the ongoing risk of rejection.
And dialysis.
Also very expensive, like $90,000 a year. And the National Kidney Foundation data shows only about 50% survival after 5 years on dialysis. So massive cost and high mortality risk.
Definitely a red flag for insurers.
Yeah.
Okay, what about congestive heart failure, Alzheimer's, dementia, mental incapacity?
These are often progressive. CHF, for instance, the American Heart Association notes about half die within 5 years. Treatment's costly too, maybe $30,000 a year.
Yes. Alzheimer's and dementia. The care needs escalate.
Dramatically. Cognitive decline, dependency. The Alzheimer's Association points to care costs hitting $80,000 a year or more in later stages. Mental incapacity often follows, signaling long-term expensive care.
And Lou Gehrig's disease, ALS, liver failure, respiratory failure, these sound particularly grim.
They generally have very poor prognosis. ALS median survival is only about 3 years.
Wow.
Liver failure without a transplant, maybe 50% make it 1 year. Respiratory failure, a recent study showed 40% 1-year mortality. These involve intensive care and have very high mortality rates.
And the last part is explicit. Terminal condition, prognosis, less than 12 months.
Yeah, that's about as clear a risk as it gets for an insurer. Issuing a policy there means an almost certain immediate payout.
You mentioned hospice numbers earlier.
Right, 1.5 million Americans in hospice in 2024, many with terminal diagnoses. It's a direct financial risk insurers aim to avoid.
Okay. Again, you can see the insurer's logic, even if it's tough for the applicants. Let's talk about the third one, HIV/AIDS and immune disorders. This one feels maybe more complex now.
It does. There's a lot more debate around this one today. The question asks, have you been medically treated or diagnosed by a medical professional as having acquired immune deficiency syndrome, AIDS, AIDS-related complex, ARC, or any immune deficiency-related disorder, or tested positive for the human immunodeficiency virus, HIV?
And like the others, a yes usually means no coverage.
Generally, yes. Immediate disqualification.
But treatment for HIV has come so far. What was the original reason this was a knockout?
Well, you have to remember the context of the 80s. When HIV/AIDS first hit, it was essentially seen as a death sentence.
Right. Very high mortality. Treatments weren't there yet.
Exactly. Survival times were very short. So from an insurer's perspective back then, it was an extremely high risk for both medical costs and early death claims. Understandable given the knowledge at the time.
But that perception seems frozen in time, almost, while the medicine has raced ahead.
That's the core of the issue now. Antiretroviral therapy art has completely changed the game. For many, HIV is a manageable chronic condition.
Like diabetes or heart disease, potentially.
In terms of manageability for many, yes. And the costs, while not trivial, aren't necessarily higher. The CDC put average annual HIV treatment costs around $20,000 in 2024. That's less than, say, dialysis or some cancer treatments we discussed.
The question also mentions ARC, AIDS-related complex. Is that still relevant?
ARC was seen as a precursor to AIDS, especially without treatment, so its inclusion made sense historically. And other immune deficiencies can involve frequent hospital stays.
But the positive HIV test part, that seems like the main point of contention now.
It really is, because it often doesn't distinguish between someone just diagnosed and someone who's been on treatment for years, whose virus is undetectable.
Undetectable means they can't transmit it, and their health is generally good.
Exactly. The CDC said in 2024, nearly 89% of diagnosed HIV-positive Americans were virally suppressed. Their health outlook can be very good, near normal life expectancy in many cases.
Yet the question often just asks, tested positive, yes or no?
And a yes triggers the DNQ. It doesn't usually ask about viral load, treatment adherence, CD4 count, none of that nuance.
That feels, well, outdated, doesn't it?
Yeah.
Discriminatory, even.
Advocacy groups certainly argue that, and some places are changing rules. California, for instance, banned denying life insurance based only on HIV status.
So some states are recognizing the medical advances. What's the insurer's counter-argument, if any? Why might they still hesitate?
They might point to potential long-term complications, even with treatment, or the small risk of drug resistance developing over time. But again, critics say other chronic conditions also have long-term risks, but don't face such a blanket exclusion.
Like diabetes again.
Right. Diabetes requires lifelong management, has serious potential complications, but isn't usually an automatic no just based on diagnosis, especially if well managed.
So it highlights this real tension between kind of historical risk perception and current medical reality.
Definitely. And it keeps the stigma alive, too.
Okay, so stepping back and looking at all three of these knockout question types, what's the bigger picture? The impact on people, on insurers?
Well, for applicants, it's a major hurdle. That 15% denial rate from KFF shows it. If you have one of these conditions, getting financial protection, life insurance, sometimes health insurance becomes incredibly difficult or impossible.
Adding financial stress on top of health stress.
Exactly. Exacerbating hardship.
And for the insurers, it's a core risk tool.
Absolutely critical for their financial stability. They need to manage the claims they pay out to keep premiums affordable for the broader pool of insured people. Remember that average $50,000 life insurance payout? They need to balance that.
But it comes with ethical questions. Fairness, access.
Big ethical questions. Who gets excluded? Is the exclusion based on up-to-date information?
And does it affect society more broadly? You mentioned stigma.
Yeah, especially with HIV, these policies can reinforce outdated fears. It also connects to healthcare disparities. People without good, consistent care might be more likely to develop these conditions, get denied insurance, and then face even bigger barriers to care. It's potentially a negative cycle.
Are things changing? Are there efforts to reform this?
There are some shifts. We're seeing more specialized policies, like guaranteed issue life insurance.
But those are usually more expensive, right? Smaller coverage amounts.
Generally, yes. Higher premiums for less coverage, often with waiting periods before the full benefit pays out. But it's an option for some who can't get standard policies.
And the legislative changes, like in California.
That's another angle, pushing for rules that reflect current medicine, particularly for HIV. But it's state by state right now.
So more widespread reform is needed to really balance things.
That's the argument. Finding ways to balance insurer viability with broader, fairer access based on current medical understanding, not just historical data.
It really sounds like a complex balancing act. Managing risk, ethical duties, evolving science.
It absolutely is. So just to wrap up the key points, these three knockout questions on chronic illness dependency, severe conditions, terminal illness, and HIV immune disorders are powerful gatekeepers in insurance.
And a yes almost always means applicant does not qualify, DNQ. It reflects the insurer trying to limit major financial risks.
Correct. But that creates this constant tension we've talked about, the need to manage risk versus the ethical goal of providing access, especially for vulnerable groups.
And crucially, medical science keeps moving, challenging the assumptions behind some of these questions.
That's probably the biggest driver for potential change. What seemed like an uninsurable risk 20 or 30 years ago might be very different today.
So looking ahead, what could change look like? More specialized products?
Possibly. More legislative action like California's? Maybe insurers developing more nuanced risk models?
Models that look beyond just the diagnosis.
Right. Considering things like how well a condition is managed, treatment adherence, individual prognosis, moving away from broad automatic exclusions, there's definitely a growing call for the industry to adapt.
It's a critical conversation. So maybe the final thought for our listeners is this. With medicine advancing so rapidly and considering the ethical side, should insurers fundamentally rethink these knockout questions?
Or is the current system, focused strongly on risk management, ultimately the fairest way to keep insurance viable and somewhat affordable for the majority?
A tough question. Something to definitely mull over as you think about your own financial security in the system we rely on.